The U.S. Federal Reserve will trim the pace of its monthly asset purchase by $10 million to $75 billion. Now, the Fed has suggested its key interest rate will stay at rock bottom even longer than previously promised. Joining me now on the line to discuss the impact of the Fed's tapering on emerging markets is George Glonis, who's the MD and Chief Economist at ETM Analytics. So, George, just taking a look at this tapering announcement, we've been expecting it for a long time, but a lot of questions being raised, or rather, pretty surprises as well, that the decision was taken now in December. Is it 10 million a good measure nonetheless with regard to tapering?
So I think 10 billion was broadly in line with what the market had expected had they tapered. I think the market was looking for it to happen in Q1 rather than in December. Nonetheless, we're splitting hairs in the broader scheme of things as to exactly when they began it. So it's been announced now. I think 10 billion is it's not huge. It's very much in line with the more measured approach which the Fed wanted to undertake. And so if they continue to do that, they could probably taper roughly that amount at most of the meetings through 2014, and towards the end of 2014, should the data hold up and the U.S. economy continues to improve, we could be in a position where the Fed has exited or is approaching that point where it exits QE, at least the third round of QE altogether.
George, back to the layman's question, what does this mean for an emerging market like South Africa, which has already been highlighted to be one of the fragile 5 economies that could be negatively impacted by tapering?
It's a very good question. I think it's you've mentioned the fact that it's one of the so-called fragile 5. It's really a reflection of the imbalances that the South African economy has, the imbalances that make it particularly fragile. And as a result of the fact that we are indeed a fragile economy, partly as a result that we're running a significant current account and budget deficits, we tend to be placed more on the margin. In other words, when sentiment is good, growth prospects are positive, everything's running neatly, so South Africa will tend to attract some flows. However, when things turn against South Africa in terms of, or turn against emerging markets in general, South Africa will be one of the first to be hit. And in this case, it might not be bad news in the sense that they're tapering because of improved growth, but it is bad news for South Africa in the sense that perhaps less money will be crowded out of the U.S. and need to find its way into emerging markets. And due to the fact that we have fewer funds that are likely to be headed towards emerging markets and South Africa in particular, potentially there's a prospect for volatility there.
George, what about the news that we had from ratings agency Fitch, basically keeping stable South Africa's long-term foreign as well as local currency issuer ratings? They're moving them essentially from BBB to BBB+.
Yeah, so I think they've given a fairly balanced perspective. I think what stands South Africa in good stead ultimately is the fact that we have a flexible exchange rate, and that most notably that we have a very low level of foreign debt exposure. In other words, most of the debt that we issue, in excess of 90% of it is domestic, and so we're not susceptible to massive currency fluctuations impacting on the amount that we owe the rest of the world. So I think that really is the main reason why South Africa was looked at slightly more favorably. But if one looks at that Fitch statement and you have a look at some of the detail, you'll also see that they measure they mention a number of risks. And again, the issues of the budget and the current account deficits are very prominent in their concerns for South Africa going forward. And I suspect that if growth does not materialize in the order of magnitude that they're looking for, in other words, in excess of 3% going forward in the next couple of years, that potentially South Africa may have I suspect the ratings agencies may have to rethink their rating on South Africa.
Sure. Well, South Africa's growth figure is definitely something that will be under the magnifying glass over the next 12 months. Thank you so much to George Glonis, MD as well as Chief Economist at ETM Analytics.